So China's economy grew a record 18.3% in the first quarter of 2021. That compared to the same quarter last year. And that is according to the country's National Bureau of Statistics. It's the biggest jump in GDP since China started keeping quarterly records in 1992. The figure, however, is heavily skewed as the surge in growth comes off a contraction in the first quarter of last year, when the economy shrank tremendously during the height of the COVID-19 outbreak there. Analysts say the GDP growth nevertheless suggests that China continues to gain economic momentum. So let's see what the markets are making of it. And let's cross over now to Chelsea Delaney, who's standing by for us at the Frankfurt Stock Exchange. Chelsea, 18.3%. Now, regardless of the fact that the economy really shrank last year, that is a very, very impressive figure. China seems to leave everyone else behind.
Yeah, it really is at this point, and China isn't going to keep up 18% growth in every quarter this year, but even so, it's expected to still see its economy grow by about 8.4%. That would really be one of the best growth rates in the world for 2021. So China is recovering much quicker than most of the rest of the world, in part because they've really controlled the virus and they've been able to reopen much quicker. But this also is benefiting the rest of the world. We've heard from a lot of companies here in Europe, as they report their earnings for the first 3 months of the year, that China is their best market right now, and so this is starting to help. The strength of the Chinese economy is helping a lot of European companies and other economies in the world.
All right, Chelsea Delaney in Frankfurt. Thank you so much. China's economic importance certainly is accelerating. At the same time, it's becoming more and more focused on building its domestic market, both in consumption and innovation. Last year, China filed nearly 69,000 patents with the World Intellectual Property Organization. That's a rise of 16%. The United States had just about 59,000 applications. That's up 3%, while in Germany the number of patent applications actually fell 3.7% to just over 18,600. As the Chinese economy expands, industries like Germany's auto sector are becoming increasingly dependent on China. 41% of Volkswagen sales volume, or the sales volume there, comes from China. China makes up about a third of BMW's overall sales, and Daimler sells 29% of its vehicles in China. The US, however, remains Germany's biggest trading partner. Last year, Germany sold 104 billion euros worth of goods and services. Now, that is a 12.5% decline on 2019, largely because of the pandemic, but China is not far behind here. Germany exported goods worth nearly 96 billion euros to China last year, more or less unchanged from before the pandemic. Now, that was a lot of facts and figures, and we need certainly somebody to put all of that for us into perspective. And I'm doing a big round here, obviously, due to the pandemic restrictions, but we're both tested. Clifford Coonan here is in the studio with me. And Clifford, first of all, what we just heard, I mean, China is increasingly looking into building its domestic market. Is that good or bad news for foreign companies?
Well, in some ways, it does offer opportunities for foreign companies, as we've seen with the trade data there. That it's becoming a great export market. It's long been a great export market for, say, Germany and other European economies, and that's going to continue, particularly when there's no growth anywhere else. So I think in the short term, definitely we're going to see a very strong focus on China as a place that will provide these opportunities.
I can hear a big but there when you focus on the short term.
Well, I think medium term there are other issues at play, because there's issues of technology transfer, and there's still the level playing fields argument that European companies are making. They don't really feel that they're getting a fair shake of the stick in the way that that Chinese companies they have a lot of extra subsidies, and the German companies, European companies feel that they're not getting the same access to things like infrastructure projects, all these kind of things that Chinese companies are able to do in a reciprocal way. So I think that would be the but, that people are still looking for greater, or for, say, shall we say, better access to China.
Now, for a long time, there was always this big issue about intellectual property when doing business with China. Now China is basically outpacing everybody else when it comes to filing new patents. What's that mean?
Well, this is very interesting. I mean, I think China is definitely pushing innovation. It's the one thing where it's falling short, and we've seen with the trade war, with microchips, for example, that once America says that you can't have our microchips, suddenly China is in a bad place. So they're looking to try and make up that kind of shortfall and to try and advance in other areas as well. So I think with the German companies, particularly, they're looking to sort of cooperate on innovation as well. But that also means technology transfer. So it's going to be an interesting few years coming up.
All right, Clifford Coonan, as always, thank you so much for joining me in the studio.